Good morning. Or perhaps it's another time of day if you're watching the podcast. It is your money. It is your retirement. It is your life. Get it right for you. Wouldn't you agree? I think you would. You want to understand the power of investing for income. Yes, yes, yes. Wouldn't you say? Peace of mind is what I believe most retirees are looking for. If you are in retirement and you do not have earned income anymore, don't you want peace of mind, comfort, confidence, and don't you want to be in a position where you are not tightening the belt because you don't know, because you don't have the information and the solid plan to give you the peace of mind, comfort, and confidence? Yes, recent studies reveal that no longer is the fear of death the greatest fear retirees have. What is that greatest fear that retirees have? Slowing it down, pausing, giving you a chance to think about that. I would imagine a good number, a good amount, a good percentage, and probably a majority of you, because that's what the studies say, and that is it's the fear of running out of money, the fear of not having enough money in retirement. This is what the studies reveal. So if you have that feeling and you don't have peace of mind and you don't have comfort, confidence, and belief that you truly, truly can get the job done in retirement and live the life you want to live with, again, confidence and comfort and peace of mind, then probably you should, at least as a consolation, know that that's what most think. But more importantly is you want to take a hold of the sentiment. It's your money, it's your retirement, it's your life. And what do you want to do? Yes, you want to get it right for you, but you want to understand the power of investing for income. And what is that? That is what I talk about on a regular basis. You are listening to the Retirement Income Source radio show and podcast. Thanks for being with me. I appreciate it. This is a new show as of and in May. Sometimes, once in a while, I used to say all the time, I never do a repeat, but we've been busy and there are some repeats, and repetition is good in terms of learning. But this is a fresh show here in May. And why am I doing it? And I do try my best, by the way, to do a fresh show every single week. But in any case, that's neither here nor there. The bottom line is, can I get you good and great messaging about how to help you in retirement? But this is the Retirement Income Source. I'm your host, Drew Pelton. And today I'm giving away the book, Common Sense Income Strategies by Michael Eastham. If you have not called up and asked for this book, I would suggest you do it. Michael's a good friend. He's a CPA by training. He actually has a tax practice. His office is outside of Orlando. Good man, very experienced, and he is one of our 18 shareholders in our Sound Income group, as I am. Michael has nailed it. He has put the messaging of income and the messaging of investing for income right where you need to hear it. It's simple, it's to the point, it's not complicated, and I think you'll love it whether you're an engineer, doctor, lawyer, Indian chief, or you're just somebody that barely likes to read some things, or wherever you are, because even sometimes well-educated people don't like to read, and I understand. But the bottom line is this book, Common Sense Income Strategies by Michael Eastham, will help you understand what you need to do to have peace of mind in retirement and peace of mind about not having to run out of money. And the answer, cut to the chase answer, is what is this? It is investing for income as opposed to growth. Because when you go for growth with lack of income, not realizing that there are losses on the other side. And people do, but they get hung up on all the narrative, hang in there, you'll be okay, and everything's going to be fantastic. Today, I am motivated by a number of different situations. One in particular I'm going to talk about. But I am calling this show, the topic of this show, and I'm looking here because I already wrote it down: voices you listen to, beliefs you have. Voices you listen to, beliefs you have. Let me say it one more time. Voices you listen to and beliefs you have relative to finances and money. Now, where do we get the beliefs we have? I'm rather certain you would agree that we get these beliefs from the voices we listen to. Well, what are the voices I'm talking about? The media, certainly, and in today's pervasive information age that we're in, where sometimes there's misinformation that gets us in trouble, or omission that gets us in trouble. In this great information age, we're listening to still, no matter how practical the financial news tries to be, normally what you hear is cheerleader, Wall Street cheerleader, be all in all the time. The problem is that most people are listening to this voice that is a voice to whoever's listening. Who's listening? Maybe a 10-year-old. Probably not. Probably very few. But let's start with this. A 20-year-old, a 30-year-old, a 40-year-old, a 50-year-old, a 60-year-old, a 70-year-old, an 80-year-old, a 90-year-old, a 100-year-old. The problem with listening to a voice that's going out to such a broad audience, when it is not spearheaded, targeted to retirees or those planning for retirement, then the problem is too often the messaging and the voice one hears, this voice, right? What's the voice you're listening to? And what are the beliefs you have? I'm asking that question. I think you should know that, because I think so many people, and not just because I think it, but what I observe is so many people get consumed, and they get gotten, and they get taken away with the broad voices of the media. That's what I'm talking about. And the broad voice of the media, generally speaking, is you've got to stay put. Now, there is, I believe, it is true. There's a certain power to buy and hold. There's a certain power to doing that. There's a certain power to not reacting, for sure. And that's probably a big question many of you are having. But I want to say that what's right now here early on in this show, if you're wondering, what do I do? Do I stay put? Do I listen to that narrative? Do I believe in Donald Trump and what he's going to do? Are we going to get out of this? Am I just going to listen to stay put and I'll be okay? Maybe so. Okay? Or, should you make a move? I don't know, because I don't know your portfolio. I do know this. Proper allocation makes sense. So what's proper allocation for a retiree? Proper allocation for a retiree, as I see it, is it doesn't matter Joe Biden, Donald Trump, it doesn't matter bad economy, good economy. When you are investing for success in retirement, where you're investing for success in the long term, your emphasis is going to be on more preservation and stability, moderate growth, and income that you can take from the income from your investments. In other words, you want stability in your portfolio. You want to grow because you need to grow your asset to keep up with inflation, but you want to get income from income. So I see a lot of copycats these days. I'm believing that our group, Sound Income Group, and everywhere in our names, you hear income, 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 income. But income should be synonymous with the numbers 5 to 7% in income, not the growth part, because there's two parts of every investment you want to think about. TR equals I plus G. Total return equals income plus growth slash L, G slash L, because the growth part of most investments has an L component, which is a potential for a loss. And when you are invested in markets, stock and or bond markets or bond-like markets, there can be fluctuation in valuation of those assets. Your consistency, your power is income generation. What is that? It is not what most people are taught. It's not what the media teaches. It's not what most salespeople are teaching. Now, what do I mean by salespeople? Well, I'll tell you what I mean. I mean, most financial advisors, unfortunately, are too much in the sales business as opposed to the true, I said it 3 times, yes, true, again, fiduciary, financial, advisory, guidance business where they not only have the knowledge, the tax knowledge, and the understanding of planning on all levels, whether it's Social Security planning, estate planning, income planning, generally financial planning, true retirement planning. And the bottom line is too many salesmen don't have the competency. But you need and you want to be working with a true fiduciary that truly understands all these matters in the planning I just said. Because if you're not, you may find yourself in not a good place. Now, I want to make it very clear here that it isn't just about product, and that's what the problem is too many people are selling a program, a product, and it's just the something they're selling. And it normally may have some benefits. I say normally, some benefits. I didn't say it's great, and I didn't say it gets the job done. And you buying mutual funds or buying ineffective annuities, which is too often what I see when people come into our office, and when people are in these ineffective annuities or mutual funds as an example, or generally in market investments where it's low yields, low dividends, low interest, meaning low income, this is problematic for people. And too many people have been sold something by a salesman. You need a true fiduciary that has all this expertise, that does all the planning, that truly has all this necessary knowledge that I just mentioned just a couple minutes ago. Yes, that is critical because that really should be the first thing. And then the second thing really connected with it, it's separate, but it's connected and it needs to connect, which is there should be the universe of choices available. Not the cookie cutter salesman selling you something because he or she wants to sell you their thing. That's a huge thing that I see, a huge problem that I see. Today, I am talking about, as a topic here on this Retirement Income Source radio show, I'm talking about voices you listen to and beliefs you have. And very often the beliefs you have come from the voices you've been listening to. And the question is because somebody's a nice guy or gal, is that really truly what is going to get the job done? A lot of times nice gals and nice guys who are quote unquote advisors that are doing more salesmanship than anything get retirees in trouble. I'm going to take a quick break, and when I come back, I'm going to tell you about a story about a gentleman that unfortunately I believe is too common. The story I can tell you I know has happened because partially I had communication with this person, he and his wife, and Lance in my office had communication. So we know that we know what happened. And I'm going to tell you this story, and it represents too much of voices people are listening to, a belief that was taken on, and quite frankly, a sentiment that was not embraced. And that sentiment was, this is my money, my retirement, and my life, and I'm going to do whatever it takes. So that's what I'm going to tell you about, meaning the story. Well, I'm giving away before the break here, The Common Sense Income Strategies by Michael Eastham. It's a great book to help you understand the power of investing for income. I believe you really need to read this no matter how sophisticated you think you are. It talks about the power of investing for income. It talks about the benefits, the advantages of investing for income when you are in retirement or right before you are retiring. You want to start to make this shift. All right. Stay tuned. I'll be right back. I can't wait to tell you this story. I think you need to hear it. I'll be right back. Thank you. Welcome back, or thanks for tuning in. You're listening to the Retirement Income Source. I'm your host, Drew Pelton. Today I'm talking about voices you listen to, beliefs you have. Voices you listen to, beliefs you have with respect to your money. I'm going to tell you this story, but I realized at the break that, at least for those on the podcast, I was holding up Michael Eastham's Common Sense Income Strategies book, which is fine, the earlier edition, but I'll just, for those of you that can see it on the podcast, or just so you know if you're listening in on the radio, there is a revised edition, and if you can see it on the podcast, you should see revised edition actually written in there, but it's the same book, Common Sense Income Strategies, simple step-by-step ways to maximize your retirement, meaning your retirement income, your retirement success, because it should be all about retirement income investing. It should be about successful retirement investing, which is about investing for income. And when you do that, you can go the distance and not have to worry so much about, well, what's going on? What's going on here? You know, there's a lot of voices out there. There's a lot of voices that are talking about the power of now investing for gold and silver, and that is something I think you should be aware of. And we'd be happy to give you some understanding about that. And I want to give you the opportunity to not only get a copy of Michael Eastham's revised edition book, the Common Sense Income Strategies book, but I also want to give you the opportunity to talk to us off air if that's something you like to do. And you can talk to me, more than likely. Sometimes I'm not available, but there could be others in our office. But if you request me, I'll sit down and talk with you and do a complimentary review and analysis of your portfolio to see how well you're doing. As in, how much risk are you taking relative to your goals and objectives and your risk tolerance? How much are you really getting in terms of income from your investments, particularly when you're taking money out of your investments? Because when you're taking money out of your investments in a down market and you don't have high yields and you start selling shares of your investments when you need income, and you sell shares where you are manufacturing income out of a growth strategy that turned into a loss situation, and you sell shares along the way, and you do this in enough down markets in retirement, this is one of the biggest reasons why people run out of money. And it is the biggest fear people have, running out of money. So let me tell this story. Okay, because I'm telling this story relative to, again, the topic today, voices you listen to, beliefs you have. So a gentleman comes into my office with his wife after attending a seminar, and like often happens, people will bring in their statements, they They'll fill out a form we have that's it's like when you go to the doctor's office, the doctor says, okay, give me your medical history. And then before the doctor starts talking, the doctor is better off when the doctor knows your blood pressure, has checked your height and weight, and maybe if it's the first time you go to the doctor, maybe you haven't given your blood yet, and so the doctor may not have the blood results, but it's better if the doctor has the blood results and has all these and any other diagnostic tests, et cetera. I mean, this is important. And we do a same kind of an approach, and this is truly a true fiduciary approach. And we do that, and I want to give you the opportunity to come in and have that opportunity to have a free complimentary review and analysis of your portfolio to see how you're doing relative to your goals, your objectives, your needs, your wishes, and with what you have, is it truly going to get the job done to go the distance, to go through the years, to go through decades? You might live 20, 30 years. The studies say that retirees are going to live, on average, 1/3 of their life is going to be spent in retirement. If you spend 1/3 of your life in retirement, are you truly going to have enough money? And are you going to be able to keep up with inflation? These are serious things to address. And I believe only a true fiduciary who's truly seasoned and experienced can help you. I know that's our office. I know that's our office here in Baton Rouge. I know that is our national firm. We have a significant amount of experience and a significant amount of knowledge to help retirees. That's our focus. With 150 plus offices around the country, we have the support group, we have the collective knowledge to help people get the job done. And it is a true specialty with true fiduciary knowledge and true availability of all programs and investments. Because if you don't have somebody that's truly trying to help you in that vein, you're probably not going to be in the best situation. Now, it seems to me this entire show, I have been giving away the book and talking about a complimentary review and analysis, and I haven't given the telephone number. You can call our office on 225-831-1394. That's 225-831-1394. Give us a call on the office line during normal business hours, and we'll help you set up a time to come in and talk with me, or you can request the book, Common Sense Income Strategies. Okay, so back to this story. So this gentleman and his wife come to a seminar. They then follow up. They come into the office. They are doing the doctor's kind of visit. They give us the information. And so I quickly assess that he has been working with the sizzle salesman. Now, there is not just one sizzle salesman in town in Baton Rouge. There's not just one sizzle salesman in Louisiana. There's not just one sizzle salesman in America. There's too many. I'm sorry. This is Drew Pelton. This is the Retirement Income Source. I'm calling it out. I don't like it. And I don't like it for the protection of others. Sizzle salesman, not telling the whole truth and nothing but the truth, is not doing something they should do. And particularly if you are technically a fiduciary. And let's talk about that for a second. You can pass the Series 65 test and be a fiduciary, but are you truly acting like a fiduciary? Do you truly have the knowledge to talk about all matters? And do you truly offer and have all investments available? That's key. Well, this particular sizzle salesman here in Baton Rouge, one of the many sizzle salesmen selling the sizzle. Now, what's the sizzle? The sizzle is basically with annuities, not real money. So I have been covering this a lot, and one of the reasons is there are so many people that have annuities. There's a lot of people that don't like annuities. I hear you, and I would say to you, I wouldn't be so categorical to go, I don't want any annuities, my money's locked up. That doesn't make sense because, look, your money's locked up. If the markets are down, you don't want to sell. You're locked up in your own head, or your advisor locks you up, or, oh, I'm in a CD, I'm locked up. I mean, that talk, I have to tell you, that, oh, my money's locked up in an annuity, is just something you don't want to, that's not the discussion. The discussion is more, does it work for you or it doesn't work for you? And, annuities, CDs, U.S. government treasuries, municipal bonds, they all have terms. I mean, you should know that. I mean, nobody says, oh, my money's locked up in a U.S. treasury. Oh, my money's locked up in a municipal bond. Oh, my money's locked up in a CD. Nobody says that. Do you know who says why the whole thing came about my money's locked up in an annuity? Because the brokerage firms that don't provide annuities for the most part started telling people that, and then people run away. Oh, my money's locked up, I can't do that. So now, I'm just giving the balance to this discussion about annuities, because not all annuities are bad, not all investments are bad. I mean, you have to understand, this is a key thing. But there's too many sizzle salesmen selling annuities where they're selling the hype bonus and the hype not real money, and they sell it like it's the real money. Okay, back to the story. Okay, so the guy comes in with his wife. I go, okay, do you know that this 8.5% or 8.25%, whatever it is, I know the company, it's an A-rated company. And I said, do you realize that return that sizzle salesman advisor, he's a sizzle salesman. That's not advisory work, okay? So the sizzle salesman tells him, I'll just say 8%, okay? It's either 8.25 or 8.5. You're going to get 8% annual return each and every year. And the sizzle salesman stops talking after those words, okay? You're not going to lose any money and you're going to get 8%. That's a lie. Excuse me, sizzle salesman, it's a lie. Let me help you and your clients and the world. It's a lie. If you've bought that, by the way, I'm just going to give you the bottom line. This guy is going to stick with the sizzle salesman, and he said, and he's doing it out of, well, I've been with the guy before, so I'm going to stay. It's because it's a relationship. Guess what he's not hearing? It's your money, it's your retirement, it's your life. Let me tell you, if this is LSU athletics, that you're fired. I mean, I wouldn't put up with that in 2 seconds. So the bottom line is, you need to understand, if you have an annuity, one of these annuities where you're getting a bonus, you need to understand, is that bonus on the real money or the not real money? And some of you are going, what are you talking about, Drew? Not the real money, the real money. Well, the fact that you don't know that is a big deal. And if I was you, I'd run in to see us and talk to me, because I'll help you understand this in 2 seconds. I could put this up on the whiteboard and I'll break this down. It's quite egregious, because it leaves people thinking they have something they don't have. If I tell you you're going to get a bonus, 10%, 20%, some of these things nationwide, 32%. If I tell you you're going to get a bonus of that money, what is your thought? What's your first thought? Your first thought is, oh, they're going to give me 32%. Now, do you understand? If you have $100,000, simple math, somebody's going to give you $32,000 real money? Do you believe that? I mean, did you believe that? It's not the real money. It's on the benefit side. So you have to understand what these lifetime income benefit features, and it's a benefit. It's called the lifetime income benefit. With these lifetime income benefit features on these plans, that there is a separate component that's calculating the amount of money you can get for a lifetime income benefit. It's not the real money. You can't walk away with it. The bonus inflates this not real money account. Whatever the gain is that you get on that not real money account, because there's separately a real money account. There's real money that gets credited differently. Not 8%. Not 8%. I mean, you cannot even believe that. I mean, if you walked away, this guy, and I exposed it to this guy, I'm jumping around a little bit. I'm like, do you realize this is not on the real money? Well, thanks for telling me. Well, I'm going to go back and talk to the guy. So he goes back and talks to the guy. I'm jumping around here. But to hear my point here. Okay, so the guy, the sizzle salesman, doesn't reveal this. So then he has a discussion with the sizzle salesman. Now I have to to tell you, I did not hear the follow-up discussion, but I was walking by Lance's office and I go, "You okay?" And he's shaking his head like, "Oh my goodness." He says, "What a conversation I just had." Well, it was the conversation with the same guy that went back to the sizzle salesman, and he tells Lance, "Yeah, I know I'm going to run out of money. I know it's not the real money. I know it's not 8% on the real money, but I'm going to get a lifetime income benefit. And it's okay that that payment is going to force me running out of money with the real money. That's okay." How do you deal with that? So Lance, because he's a good guy and he's trying to help the guy, he's shaking his head. It's like, how do you deal with that? And let me say this with all due respect to some of you listening in, okay? It's never good in life to be a hardhead. It's never good in life to be stubborn. So what is a hardhead and stubborn? Or what is hard-headedness and stubbornness? It's not being open. It's shutting things down. It's not learning. And it's not LSU athletics. Let me tell you, that's how I call it. I just think LSU athletics. Don't mess with LSU athletic department. They're all about winning. I love it. Win, win, win. Coaches need to win. Teams need to win. And they pay a lot of money to these coaches, and sometimes they get caught up in having to honor contracts and things have a timing to them, whatever. But we all know, is there anybody in Baton Rouge, Louisiana, that knows anything about sports, even halfway about sports? Even my wife, who is not big with watching sports or following LSU, she loves all the LSU teams, and she's happy when we win, but it's not like Karen follows it. But the bottom line to this whole thing is that it's a winning attitude. It's a must-win attitude. It's an embracement, like in finances. It's my money. It's my retirement. It's my life. Well, you start there, and then you go, I got to get the facts. I got to get the knowledge. And then ultimately, you got to make a good decision for you. Okay, so listen, I can lead the horse to waters. The old saying, you can lead a horse to water, but you can't make him drink it. So, you're not calling the guy a horse. He's a nice man. His wife is a nice person. But the hard-headedness and stubbornness, and it makes me think, by the way, when we were in the appointment, I said, listen, if I was you, I'd be LSU athletics and just deal with this now. So he goes, no, I'm a hardhead. Well, he's so hard-headed, he's going to stick with the plan where he's going to run out of money, and the 8.5% is not the real money. It's in a sense beyond me. But what I'm trying to do here on this show is be careful of the voice you're listening to. I'm calling the topic of the show today, voices you listen to, beliefs you have. Be careful for you. Here's the voice to listen to, the one I'm giving here, because it's in your best interest. And so don't get caught up in a situation like I just gave you. We hear too many situations like this. There's too many people, and they get sold a bill of goods. They get sold the sizzle, and it's not helping them. Look, retirement could be a long time. You need to make your money last, not run out of money in an annuity when the guy told you you're not going to run out of money. That's a problem right there. Okay. More to tell you. We're talking about success. We're talking about successful retirement investing. All right, stay tuned. You don't want to miss it as we continue to talk about how you can get it right for you. All right, hang in there. I'll be right back. You don't want to miss it. Voices you listen to, beliefs you have. Voices you listen to, beliefs you have. This is Drew Pelton doing the introspection thing for the 10,433rd time in my life. Might be more like the 40th time. The 400th time. What am I saying? I know who I am. This is Coach Drew Pelton. This is Drew Introspection Pelton. This is the retirement income source. And I am always good about talking about the truth, the whole truth, nothing but the truth. So help me God. And I do not say that lightly. I hope for you, in your own introspection, in your own thinking about your money, your retirement, and your life, that you truly take a hold of it and that you truly make good and great decisions for you. That takes two things primarily. One is it takes getting information to understand. And number two, it takes taking action for you in your best interest. So if you sit back and you don't first look at yourself in the mirror, and you don't first look at your investments carefully, and you don't carefully understand and look and understand what you're doing and what you can be doing and what you should be doing, where you stop the, in a sense, disease of ease, which is, well, my guy's good, I'm good, I've known him forever kind of thing. If you don't take a very serious look at what you're doing with your money and then be prepared to take action, you may have a problem, and more than likely you will as you get older. Most people are not like my friend Dr. Bill Pepe in Miami. Maybe he's listening in. Bill's a retired dentist, good man, good saver, smart investor. He's done very well for himself, and I commend him for all he's done. And without giving his numbers away, which I know his numbers, I would say, good job, Billy. Good job, Dr. Pepe. But most people are not in Bill's position. Most people have not enough money, and they have very little money. And part of the reason is because of inflation. Part of the reason is because of the devaluation of the dollar. And you have to understand some of these very general basic principles that I might call macroeconomics 101. You need to be aware of the devastation of inflation over time. I mean, without going through the rule of 72, which some of you may know that math rule, and I've done it before on the show, but just to make a point, if inflation is at 3.6%, in 10 years, you are going to need 50% more income than you are getting right now out of your retirement monies to keep up with the cost of living, assuming what has been on average for the last 40, 50 years at 3.6, and some are even saying it's now up to 3.8% on average. And if you don't factor that in, and you don't understand how to invest wisely, as in invest for income, you're going to start realizing that your retirement lifestyle is going to start to reduce. And you additionally may have a problem with having inadequate monies for long-term care. So the factor of inflation has to be understood. And let me say it this way. Most of you may be listening to this show and you're relatively speaking in retirement young. Let's say you're in your 60s, 70s, and you go, 10 years, I expect to be alive. Well, let's talk about 20 years. Well, it's pretty simple. 3.6%, and I'll just tell you the rule of 72. Put 3.6% into 72. It's the rule of doubling your money, but it also helps you understand the devastation of inflation. 3.6 into 72 is 20. What's 20? In 20 years, you're going to need twice as much money as you are spending now. Let's just say, your lifestyle is $50,000 or whatever your lifestyle is, or it's $100,000 even. Whatever your lifestyle is, if it's $50,000, you're going to need $100,000. If it's $100,000, you're going to need $200,000. Where's that money coming from? How are you going to get that? Back to the story I just told in the second segment of the show where this guy's like, well, I'm fine running out of money. I mean, cluelessness and over loyalty, because if you heard that story, I mean, I would say what was not good on the part of the salesman is he's doing sizzle sales talk. He literally, to me, misled the client. He told him he's getting 8.5%. He's not getting 8.5% or 8%, because I forget if it's 8.5 or 8.25. I'll just say 8%. So he's not getting 8% on the real money. He's getting 8% on the faux money. He's getting 8% on the sizzle account. He's getting 8% on the benefit account. It's not the real money. It's a calculator account to determine what the lifetime income benefit's going to be. And it usually inflates the number enough that because the real money isn't earning that much, people are going to run out of money. The guy I was talking about, he tells Lance in my office, he goes, I'm not worried about running out of money. Oh my goodness. And, without sharing the guy's situation, he didn't have, quote unquote, a lot. It's like in retirement, you need to be smart. You need to preserve your money. You need to grow your money. And you need to get income. It's the triple advantage. You need all three of those working together. You can't let, I believe, the sizzles annuity salesman go, look, I'm giving you all this, and it's not really accurately told. It's, quote unquote, misleading by omission and not telling the person something. And the reality is that you're going to run out of money in an annuity, or you're going to run out of money with mutual funds and ETFs when there's low yields because you don't have 5 to 7% in yields. Today, I'm talking about the voices you listen to and the beliefs you have. That's the topic of today's show on this Retirement Income Source radio show. I'm your host, Drew Pelton. I'm with you each and every weekend on the radio. And I'm also on this podcast that you can catch me on the internet. And we hope you're clicking thumbs up and you like to hear more, because I'm calling it like it is. I'm all about calling it like it is. I'm all about success. I'm all about retirement investing success. Is there anything wrong with that? I don't think so. But that takes participation. I can teach and preach and coach and guide and pontificate and on and on and on and on. But you, the participant, you, the player, you've got to score. You've got to win games. You've got to do your part. You can't just go say, well, I'm on the team. Oh, I'm on the team of, whatever brokerage firm or financial firm you're working with, or, oh, I'm with my guy. He's a good guy. I like him. Okay, well, that's good. I'm glad you think you like it. But is it really, really, truly getting the job done? You are not married. I would say to my clients, you're not married to me. Other than my wife, she's a client. So, but that's because she invests. I mean, it's kind of silly, but to get back on track here, the bottom line is that you're not married to your financial advisor. You're married to your spouse. You're married to your family. You should be married to your retirement. You should be married to your legacy. You should be married to your money, your retirement, your life. That's what you should be married to, not the advisor that just categorically says everything and you think you're okay. You know what I deal with every week? Mistakes. You know what I deal with every week? Correcting mistakes. You know what I see over and over and over again? Egregious mistakes, terrible mistakes that people are making. And a lot of it comes because you, the investor, are listening to voices that are truly not helping you, and you're listening to somebody that sold you something. You're listening to somebody that may even have experience, but they have their agenda. And you don't know it, and you really haven't discerned. Maybe you haven't been able to discern. Well, I'm certain if you're talking with us, we can help you understand that. And you can give us a call on 225-831-1394. That's our office line. We're happy to talk to you about how you can get it right for you. Now, in addition, you can call to have a complimentary review and analysis of your portfolio and if you're coming in the office, we'll give you a copy of this book. And it's called Common Sense Income Strategies by Michael Eastham. He's a CPA, he's a friend, he's a shareholder of our Sound Income Group. I will see him in about a week and a half at our shareholders meeting in Georgia. And Michael is a man of integrity, he's a man of intelligence, and he's a man, as I am, that knows and believes that the power of income is what gets the job done. So he's written this great book, Common Sense Income Strategies, to help you understand what you need to do in retirement to get it done. It'll substantiate what I say on this radio show. It will give you further insight. I think you need to get a copy. I would call up today or as soon as you can. 225-831-1394. Call us. We're happy to give you a copy. You don't have to feel obligated to come in. But if I was you, I would come in here and I would have me and my team look at what you're doing, because this is serious business. What's serious business? Your money, your retirement, your life. That's what's serious, okay? It is your retirement. It is your money. It is your life, and you need to get it right for you. You're listening to the Retirement Income Source here on this radio show and this podcast. I'm your host, Drew Pelton, and we are here in the third segment. I'm going to take a quick break, but I implore you, I beg of you, for you, don't do it for me. I've been doing this a very long time. God is good. God's been good to me. God's good to my wife. God's good to our staff. We have a staff that is set for the long term. I just bought a new office building. I keep talking about that. You probably say, when are you going to move in? Oh my goodness, everything always takes so long. We own the building, so we're going to have room for the future. We have a good, great, dedicated staff that is poised. And like Karen always says, what if something happens to you? Do I even look like or sound like something is going to happen to me? I mean, look, anything can happen. I'm taking good care of myself. My objective, I'm going to be here for you myself, but this staff can get the job done no matter what. So if you're thinking about Drew Pelton and retirement, I'll just say, don't go there. You don't have to go there. So I love what I do. It's a great thing. I love helping people. I love sharing the truth. I love sharing the facts. I love helping people understand what they need to do, and I love helping people get the job done in true execution mode. All right, I'm going to take a break for our last section of this show, where I want you to think about further I'm going to come back and I'm going to talk more about who are you listening to? What voices are you listening to? What beliefs do you have? Because I think that there's too much acceptance and there's too much herd mentality and there's too much cattle call thing that goes on. And that cattle call thing is, well, everybody else is doing it. My friend's doing it. This is not an analytical approach to your investments. And you don't have to be a doctor, lawyer, engineer, as an example, or a financial expert to understand what this is all about. We can keep it simple. I think before the break, I'll say this. One of the key things I think we do here at Drew Pelton Investment Services, part of this great Sound Income Group we are part of, is we take the complicated and the complex subject matter and we make it simple and easy to understand. Well, that's good and great. But then, at the end of the day, how do you get it right for you, where your goals and objectives match up to your investment strategy that's about investing for income? All right. Stay tuned for this last segment of the show. I hope this is helping you. I hope it makes sense. Call us. Take action. I know many of you are listening to this show, and you need a review, and you know you need a review. you should call us, 225-831-1394. Don't do it for me. Do it for you. Do it for you and your wife and your legacy. All right, stay tuned. I'll be right back. You don't want to miss it. Welcome back to the last segment of the show. It's always seeming to be a short one because I am historically or notoriously, maybe better said, or both. I'm with the long segments. Well, hopefully you go the distance with me, and if you've been listening in the entire time, thanks for listening in, or if you're just joining at the last minute, let me tell you, we've been talking about voices you listen to and beliefs you have. And it's a really important thing to understand and know the voices you're listening to. And what do they really mean in your life? As in, what beliefs have you taken from the voices you're listening to? The media, your financial advisor, a friend, simply said others. What is this messaging you're listening to when I say the voice or the voices you're listening to? The world speaks. We're in the information age. What are you hearing and what are you believing? And do you think you know something that might possibly be incorrect? Did you ever have a paradigm shift on something where you thought, I know it's this, I know it's that, and somehow you have a breakthrough? Well, I believe this. Most people need a breakthrough. Why do you need a breakthrough? Because most people's formula in thinking about investments is R equals G, or R equals A. R equals growth in risky types of investments, or taking risk in markets, or R equals A. I'm an annuity buyer, and you're a buyer as opposed to an annuity investor, and that's a problem right there. And most people have never been taught, and particularly, and it's understandably, in the accumulation phase of life, mostly it is R equals G. And mostly it's just take risk. I have time. I'm adding money. I do dollar cost averaging. I get a tax deduction. I get a match. And things work out over 10, 20, 30, sometimes 40 years in a retirement plan, savings. Well, when you're in retirement, it's a different phase of life. And you have to understand that you need to make a shift to a distribution phase strategy of investing for income. Well, there's too many narratives, too much messaging about stay put, you'll be okay, and too many people are caught up in the thinking that gets them in trouble. At the end of the day, you want to preserve your money, and you want to be able to go forth in life and have the best dreams in retirement fulfilled while you're in retirement. You want your dreams fulfilled in retirement. Well, how do you get that done? You need money. You need consistent money. And what kind of money do you need? I'll tell you what kind of money you need. You need income money. You want to get income from income. It's all about income. Drew, how do you keep talking about income all the time? Because the whole world's talking about growth all the time. Or bad annuities. And they're not telling you they're bad annuities. That's my new kick. Picking on bad annuities. There's too many annuities that don't get the job done. There are some that work, and a lot of people like them. We have clients that like them, but they work for them, and they're customized and they're tailored. But we don't sell annuities. Oh yeah, Drew, I know you don't sell annuities. Yeah, I don't sell anything. I'm not in the selling business. I'm in the doctor placement business. I'm in the prescription business. Prescribe that which is good and great for the client. You want to be careful of who you're listening to. There's too many voices that are stuck in the accumulation phase talking that's going to give you issues and problems in retirement where you haven't made the shift to a distribution phase of investing. You need to understand this. It's your money, it's your retirement, it's your life. Understand the power of investing for income where you can get 5 to 7% in yields, and additionally you get good growth. Let's say you get 4 or 6% in growth moderate and you get 5-7% in yields, which we do, let's just say it's on average 10%. That's what you need for income, keep up with inflation, preserve your assets. That's the name of the game. You don't want to run out of money, right? Well, nobody does. Have the peace of mind and have the comfort and confidence in retirement. It's your money. It's your retirement. It's your life. Get it right for you. Understand the power of investing for income. Be with me next week as I give you good and great information I believe, and I hope you believe, that help you make good and great decisions for yourself. Have a good, great, and blessed day, and I'll see you soon.